Hey everyone, it's Troy Sage here, and on this episode of Real Estate Talk, January the 16th, 2022, we are going to discuss the trends of real estate, what's going on in the market across the country, and what to expect for the rest of this month and the first quarter of this year. Stay tuned. Hey everyone, Troy Sage here, and today is Sunday, January the 16th, and I just wanted to put out this quick real estate podcast and blog in regards to real estate news on what's going on in the local market right now and what to expect through the first quarter. So according to our last podcast, we discussed the fact that the market was going to shift and we were going to see higher interest rates and we're going to see slightly different trends in regards to supply and demand. And let me tell you what has happened in just the past week, and that is this. Supply is even lower because we simply cannot control how fast new construction is being built, and there's just not that many homes that are resale available on the market. But what we're seeing is this, is the uptick in actual interest rates is pushing some people out of the market. So what does this mean? This means if you thought last year, well, I'll wait another year to see what happens, what's going to happen with the market, or I'm going to wait another 3 to 6 months to see if prices are going to come down. Some of these people at this point in time are now looking at an average of $100 to $200 a month more to purchase the same property that they could have 90 days ago, and they're falling out of the market, meaning they no longer qualify to purchase a home. So I just want to put this quick blog out to say, listen, if you're thinking about buying a property, you're thinking about buying a home, do it before interest rates get high. I know this sounds a little bit like a commercial, but it's not. The higher the interest rate, the less affordability you have as a buyer. So as interest rates start to go up, you may not qualify to actually purchase a home because the interest rates are higher and your debt to income ratio may not work out for you. So those of you that were thinking of, I'm going to time the market, I'm going to wait for the market to dip a little bit, there is no indicator in sight showing that the market is going to slow down, meaning that there's going to be an abundance of homes available. And when that happens, our supply and demand issue is going to be cured. We don't see that anywhere at any step of the way. This has been going on for several years now. Lack of inventory and low interest rates. Well, interest rates are just starting to creep up this week alone compared to last week. So we have buyers right now that can't qualify this week that could qualify last week. So I'm not saying that, that the sky is falling for buyers. What I'm saying is this: for buyers, be prepared to be in a multiple offer situation, no matter where you're at in the country, if the home is a shiny penny, if the property is turnkey and you can move right in. And I have to say with this caveat, there's homes out there right now across the country that you're going to have to do some work to them. And there's going to be multiple offers on the property. On an average, California, Arizona, and North Texas, where I sell real estate in all three of those areas, we are looking at 105% up to 125% of the list price. That is what the homes are selling for. So do the math. If the home is listed for $100,000, it's going to probably sell for $105,000 to $125,000. Multiply that by however many hundred thousands of dollars that you're going to spend. So now is not the time as a buyer to sit back and wait to think that the prices are going to come down. Prices are not going to come down because so many people have so much equity. Think about this. If you bought just 2 years ago, if you bought in 2020, you could have on an average of 18 to 30% equity in your property right now, depending on where you're at in the country. These people don't have to sell. There's no fire sale. Not to say that we may not see short sales, not to say that we may not see foreclosures due to the forbearance situation, which is a total another podcast and another episode. The point is, if you're a buyer, now is the time to hunker down and buy that property, because as you're seeing rates start to go up, it will pull you out of the ability to purchase a home if you're teetering with your debt to income ratio. So just something to think about. Wanted to throw this podcast out real quick because of the fact that I'm watching this over the weekend. I'm watching going to properties with 10, 15, 20, 30 couples walking through an open house within an hour. I mean, they're just packed. These open houses are packed, people wanting to buy homes. And we're in multiple offer situations with every one of our buyers. For our sellers, they're extremely happy because they're in multiple offer situations. They're getting more than what they're asking for. But really, if you're a buyer and you're thinking about purchasing a home, now is 100% the time to consider it, because prices are not coming down. Interest rates are increasing, are going up, and rents are increasing. So the choice is yours. Buy something, own it, create equity with it, create equity, build equity, or keep renting. But if you're thinking about buying, now is the time. If you need help on your specific area that you live in to see what homes are buying and selling for, if you need help figuring out your debt to income ratio, reach out to me. My address is troy@troysage.com. If I can't personally help you, I will put you in touch with someone I know or have referred business to help you have a clear path to home ownership. Thanks for listening to the podcast. Thanks for watching this video. Please subscribe and pass the word. And as always, my friends, make it a great day.